Welcome to the Swing Trading with Cycles channel. This is October 21st, Friday night. So we have a full weekly candle. We're going to look at the broader markets. We'll start with the SPX. So we'll start with the daily chart. Take a look at the link in the description. I am assuming you've seen the Cycles 101 content, written, video. Make sure you get familiar with that. I'll assume you've looked at that content. So this was our daily cycle low, day 27. This line running through here, this moving average is your 10-day moving average. Notice we opened right above that today and then just kind of zoomed higher. So just to kind of focus in here, this low was day 27. Then this is day 1, 2, day 3 was our high. 4, 5. This was day 6. So we didn't actually make a new high today, did we? 37.57 versus 37.62. So we didn't. Which is not bad because it really sets us up for that. It makes that high now like a magnet almost, right? And really, as I mentioned in the last video, as always, link in the description, we're like on a collision course with like that, call it low 3,800 area. So like another 50 points of upside at least. What happens when we get there? That's going to be your important question. But this is day 6. I will actually add that to this chart. I'll actually just add it here, right? Because I really do expect we're going to make a new high above day 3, so it won't matter to mark that anymore. And I mean, if you just look at this visually, it's an uptrend. It's a little uptrend. We have this high, this higher low, higher high, higher low. Now we need to make a higher high above this, and then hold a higher low, and then off to the races. So this is your daily cycle low on day 27. And importantly, also your weekly cycle low. That was your CPI day. We talked about this in the previous videos. I hope you're keeping track. These important like data release days, CPI, sometimes jobs report. The next big one is going to be the Fed meeting early November. So that's in a couple weeks. We'll look at that, see what that means in terms of like where we are. But we have a swing low. There was a point just like yesterday, it looked like we were going to fail that swing low. And then we got this big violent reversal. Now, a lot of that is probably attributed to that Wall Street Journal article that suggests the Fed might pivot in December. There's always some catalyst that sort of sparks the price action. But now we would expect some follow through next week. Notice we're still pretty far below our 10-week moving average. You'd expect that we at least get above that, even if we're going to get a bearish reversal. And in fact, you could see us get all the way up to 4,100 and still have this thing still be bearish. That's almost another like 250 points from here. So it does look like we have another weekly cycle low that's pretty early, getting people off guard, let's say, because the previous one was week 16. This looks like it's one on week 17. That's a pretty early period for like a weekly cycle low. So, a lot of people, a lot of analysts, especially, people tend to kind of really follow timing bands, would be expecting a weekly cycle low much later. And maybe that is what we get. And as I always say, you really want to kind of follow the price action, most importantly. This little pivot here is the next one we're going to have to really take out, right? Like, and that's right at that sort of low 3,800 area. So no coincidence what we saw on the daily chart. And speaking of the daily chart, now that we have a new daily cycle, let's see where the Fed meeting puts us. So the Fed meeting is going to be on November, or the announcement, I should say, would be on the 2nd. So that's just 13 trading days, right? So that's interesting. Because again, that kind of event is going to be some kind of catalyst. And then if you think about after that, we're going to get the CPI report. That usually comes in mid-November or early November, I should say. So maybe November 10th. That would get us to 19 days. So you could definitely see a world where we come back and collapse close out this cycle and this wasn't your daily cycle, there are a lot of different scenarios that can kind of play out. This doesn't, like, it's not like we have like a nice 25, 30 day period even where you can imagine it will kind of ratchet up and then kind of come down. But again, this isn't about predicting where we're going to go. It's really about laying out some scenarios. So far, again, the weekly looks bullish. The monthly is also green now. But remember, the broader context, we are in the declining phase of the 3-year cycle, right? It's month 31. Now, is it possible that we're actually getting our 3-year cycle low really early on month 31? It's entirely possible. And we have 6 trading days left in October. We'll see how November opens. Do we get the swing low? Do we get a high above the high from this candle? Because this candle marks the low technically. So this could be our swing low. But we're going to need to see more price action to determine that. It is possible. If we go to QQQ, let's see, what are our levels? Where are our levels? Because really the story is the same. It's the levels that change a little bit. So the Qs came much further away from making a high. So definitely lagging the S&P by quite a bit. And for the Qs, right, same thing. It's day 6. But, came much further away from making a high. That's really kind of telling you something. Like that tech isn't necessarily the best in favor. And also look at this weekly chart. That S&P 500 swing low was like very much higher. This is just like right on the cusp. But notice it's the same pattern. We really need to make a high above this area, this candle that like failed pretty massively. In the case of the Qs, that's right around 285. We'll see how we fare above there, or around there, I should say. And finally, on the monthly chart, same pattern, made a new low for the month, actually below the 50-month moving average. That's a very long-term moving average, about 5 years. But it's recovered since, now trying to turn into a green hammer, although now it's still more of a doji. But again, this is a downtrend. Just to be really clear. So we could do something like this even, and then something like that. We've got to be careful, got to be vigilant. That's the Qs. And finally, IWM. Let's look at the daily. So this is really telling. Look how far below the day 3 high IWM was. Notice that S&P came so close to it that we had to we had to squint our eyes to check if it were there. Qs was visibly lower. This is way lower. Like, this is still a pretty aggressive swing high, actually, is the way you could think about it, right? Like, we just came right up to that level. Now, obviously, that could change. Things could change on Monday, next week, what have you. But right now, this is not an auspicious start. I suspect we'll probably make a new high above here. But that's the thing. Now it's kind of a little bit of a question. I mean, it's actually materially below that. That's your daily chart. Again, this is IWM, so small caps. And right, this is what you get on the weekly chart. We did not close as a swing high because we didn't close above this high. We got a pretty big pullback wick on the upper. And so this is really kind of setting up a little bear flag kind of situation. We could certainly see a world where the small caps diverge, especially in a world where everyone thinks we're going into recession. Maybe that means small caps are going to massively underperform. And on the monthly chart, same pattern as the other ones, made a new low, kind of dipped below, but it's now holding green so far. That's not saying much. Those lower time frames aren't looking so hot, but this is a little bit of a double bottom setup. The other thing I would mention here is that it does appear that the Dixie is going into a weekly cycle low, and so that should be wind at the backs of the indices and other risk assets in general. So we'll see if that actually plays out. Those are the levels that we want to watch. Those are the scenarios that we want to kind of pay attention to.